The market is volatile, the stocks keep going down. Then boom, we hit new highs. Everything is different now, but you don't gotta chase. Don't panic, don't stress. Time to realign, plan it out, invest. It's the First Fruits Podcast. We elevating with the First Fruits Podcast. No time for waiting, time to grow, give back, reinvest like that. Everything you need to know, the First Fruits Podcast. Let's go.
Welcome to another episode of the First Fruit Stock Club. Man. One day I'm going to start keeping track of episodes. But man, glad to be here, right? Every week, no week is promised to us. So I'm here again with another episode of the First Fruit Stock Club. Man, I hope your week is it's been going well for you. All right, we're at Hump Day today. Markets have been crazy. We're going to get into all that. So today is going to be more of a strategy session, right? We're going to go into strategy and how to deal with the market like this, because this market is different. Isn't the market that we had last year? Even a year before, this market is different problems and issues, conflicts, war, a lot of different things are going on right now. But before I get into everything, man, I had to have a hard conversation with my son. Of you who are out there who have kids and man, are dealing with kids in school, and sometimes kids don't do what they're supposed to do. Is that I know that's not a surprise, but sometimes, and I had to have a hard conversation with my son today about doing what he's supposed to do. Like, he has great grades, but man, Spanish right now is kicking his butt. But he's just not doing the fundamentals, like the basic stuff. Like if there's homework every Friday, even if you don't do well on the test, you make sure you do the homework, right? Fundamental lesson. And homework will help you do better on the test. Well, of course, my son hasn't done his homework, hasn't completed his homework. So, I'm go into Canvas. If you guys are familiar with Canvas, the online platform where, if you're a parent, you can go and look at your son's grades, son or daughter, look at their grades and see. And I look on there and like, this is a conversation we've been having for the last few weeks. And he's been missing assignments. I'm like, dude, we've talked about this. Like, what's the problem? And, he's in 7th grade, and I did let him know, like, you're like two years away, or a year and a half away, or even less than a year and a half away from high school. Like, you have to get these fundamentals down now. You got to get them down now, because what happens is if you don't get them down now, the study habits, he has a planner, right? And he said, well, I forget. I'm like, son, what's up with the excuses, dude? Why do you forget? And I'm helping remind you. And then I'm telling you to make sure that you put the information in the planner. You can't remember everything, right? You can't remember everything. You need to have a strategy where you write things down. Stop trying to remember everything. And this kind of goes into the topic on today. What we're going to discuss is that this is what I call a fundamental market. Right? Where you need a fundamental strategy to kind of get through this market until we come to the other side of this, which we don't know when, this conflict will end. And, the market is so choppy, it's really hard to trade, the only trades that I've gotten is I've been trading metals and also in my club and trading commodities. That's about it. Everything else has been dogs. So anyway, so I'm going to give you guys a strategy of what's going on and how I'm attacking the market. So today's topic is, are we there yet? Right? Question, are we there yet? It's my kids when we go on a road trip. Are we there yet, Dad? No, we not there yet. Wait, and the thing is the bottom end or another drop coming? All right, it's the bottom end or another drop coming, right? And we don't know, right? This conflict thing could go on. We've been hearing bits and pieces about, I think yesterday a 15 piece plan was sent to Iran, and to see if we could negotiate and end it and open up the Strait of Hormuz. But then there's the communications, and I often discuss market communication, right? Right. So you have the goal, the communication, the buy-in, and the policy or procedures that are done with the market. You have all these different forces, and right now we're in that communication stage, right? And communication has not been positive, right? Hasn't been positive, right? Because the communication is like, look, we're not opening it up. As a matter of fact, they're allowing some people to pay them to get, and a lot of countries are being hurt right now in the price of oil. Some people are paying like a dollar. $1.70 a barrel, right? So we $170 a barrel, not a dollar. $170 a barrel. So, we're in this predicament where the communication is saying one thing is said from us, the United States, another thing is said through Iran. So we don't know what's going on, and we don't know behind the scenes. So we may be in this this phase of the market for a while. So the thing is, how do we make it through one of these seasons in the market? And like I said, the best way to do is we're going to work on the fundamentals. All right. So look, before I move forward, man, please like, share, subscribe to the show. Like, share, subscribe. Man, tell somebody else about the show. I'd appreciate it. I'm trying to get my message out there, the First Fruit Stock Club. I appreciate it. Let me go through the disclaimer. The information provided in First Fruit Stock Club podcast is for educational and informational purposes only. It should not be considered financial, investment, tax, legal advice. The views expressed by the host and the guests are their own and do not reflect the opinions of any financial institution or regulatory authority. Investing in stocks and other securities carries risk, including potential loss of principal. Past performance is not indicative of future results. Always conduct your own research and consult with a licensed financial professional before making any investment decisions. The First Fruit Stock Club and its affiliates do not guarantee any specific outcomes or returns. By listening to this podcast, you acknowledge that you are responsible for your own investment decisions. All right. So, getting back to the, to what we're going to talk about in the story is, so, sometimes, we want super growth in our life. We want all the money in the world as soon as we can get it. We want, we have high expectations, but sometimes, you kind of got to put your head down and do the grind thing for a little while, right? And I call that a foundational time. And matter of fact, I can remember, as I coach, and if you have kids out there in sports, I coach, and man, we were winning for a while, and then we were on a stretch where we could not make layups. Like we couldn't make, we had big guys, and on a basketball team, you got your tall big guys, and then you got your young guys, and the big guys could not make layups. Like we were missing a lot of layups. I mean, like a lot. So what I had to do in practice is, man, I had to separate the small guards and forwards. You guys work on free throws. You guys work on passing. And the big guys, we're gonna work on layups. Like we're gonna spend time on the fundamental uh, 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 aspect of basketball is making a layup. Right? If you can make your layup, especially, I'm coaching 6th, 7th grade. So if you can make your layups, you can win most games. Right? And so anyway, so yeah, life sometimes is about fundamentals. It's not about the glitz and glamour. All right. So let's get into the market. Today's market, man, we've been up. We were up today. Wednesday, the 25th, March 25th. We were up today. 300 Dow Jones Industrial 305 up 305 points. S&P 500 up 35 points, and NASDAQ up 167 points. So an overall good day, but the market has been rocky. So let's look at the Dow Jones. As we see on March the 20th, we went, market was on a downtrend. But what happened is after our president announced that he had some negotiations in the market, the market started to bounce. And we've been bouncing. It's been rocky. As you see, if you look through this chart, we've been bouncing, but we've been bouncing to the upside. And so that's the hopefulness of the ability for us to be able to negotiate with Iran and open the Strait of Hormuz, right? Same thing, S&P 500. And if you look at the volume, especially the S&P 500, the volume has been kind of light. A lot of people aren't trading. A lot of people have decided to sit on the sidelines in the market just because it's been so rocky. And, if you look at the volume, is 2.92 million, and the average is 5.5. So we're like 2 billion shares short compared to the average shares that are traded. All right. And then the NASDAQ also, right? 6.7 and 8 plus billion shares. So close to, a billion plus shares. And basically we're under the average in the market, right? So we always want to look at that. We want to see if people are in the market and are people trading and consider this a viable market to trade, right? And the volume usually tells us that. That's why I review this every week. It tells us that are people in the market, are institutions in the market? Are they trading? Are they buying? Are they selling? Right? Volume tells us that. Right? The volume tells us that. All right, so look. So, like I said, this week the topic is, are we there yet? And this is what I call a foundational period. Foundational period, when you build a house, you have to build a foundation. All right. And so let's go on. So in a foundational period, we need to build positions and indexes. Right. This is a strategy. This will be a strategy session. This is something that you guys can do, right, to move your portfolio. This is a tough market to trade. You're looking at your portfolio, and the portfolio is not going up. It's been in the red. You've tried particular trades, they're not working, right? And you just want to give up. But this is the market that you get rich in. All right? This is how you get rich in the market. Like, there's no guarantee, right? And you have to know what you're doing. But markets like this, where prices are depreciating, the market's depreciating, you're not buying at the high and trying to sell at the low. You can actually buy some stocks. Some stocks are really beaten down. I'm going to discuss one of them at the end of the show. Let me just write a note so I don't forget. And so this is a strategy session that I'm going to give you guys to help you along in this. So we want to build positions in the indexes. We want to hold cash for opportunities, and we want to increase cash flow. So how are we going to do that? All right, so look. So we want to build positions, right, in the indexes, and often know that the United States has the greatest stock market in the world, right? Like I think 8 of the top 10 companies in the world, largest companies in the world, are based in the United States. So the S&P 500 are the 500 largest stocks in the United States. Has 11 sectors in it, and basically, the indexes allow you to buy all the stocks that are in the S&P 500, right? So you find your own S&P 500 fund. There's bunches, numerous ones out there. You pick your own. And then not only that, you need a NASDAQ, you need a growth fund, right? NASDAQ 100. We know that we are in the technology age right now. Ever since COVID, people went home. Chips have gotten faster. People continue. The growth of online continues to grow. Everything's continuing and moving online, and therefore we need to be in that age. That, from a Meta to an Nvidia, all of the top stocks and they're considered technology stocks are located in the Nasdaq. So we want to be there, all right. And this is a time for you to build, and not just single stocks, to build positions in the Nasdaq and the index. Finds you a nice technology Nasdaq 100 top stocks or technology ETF, right? And you build a position in there while the prices are decreased. These are fundamental moves. These are the layups, right? And they're not pretty, right? You want to see a bunch of this online, right? But these are the fundamental moves that you can make in your portfolio. And what happens is that when you have that and it builds that foundation, then you can build on top of those things. But what happens is a lot of times people want to start with the flashy and the glitz and glamour first, and they forget about the fundamentals. Like I was telling in the beginning, as I discussed with my son, right? Homework. You got to just do homework. That's the basics, right? And we're going to get you the basics here, all right? The second move we can make is, holding cash for opportunities, right? And this is something else that's not fun, but it's essential, right? That you hold cash in the account and you have it available. I know when I talk to all my members in my club, we use E-Trade, and sometimes, there can be, in regards to, well, if you're buying stocks, E-Trade will let you have the money. If you deposit it, you transfer the money in, they'll allow you to have access and to trade with that money as soon as possible. But with options, the money has to be there, which makes sense. They don't want to be liable for trading and something happens to the money, and options can lose their value. So what happens is that you need to make sure you have cash in a brokerage account, right? Available and ready for when the market turns. Because when it's going to turn, it's going to be quickly, right? And it's not, you're not going to have a whole lot of time. And so right now you need to make your Santa Claus list and check it twice, right? And hold cash in the account. And what I tell you, the whole strategy of my club is named the First Fruits. And the whole premise behind First Fruits is that you take your first dollars, right? It's such a fundamental thing, but I know most people don't do it, right? But you have to take your first dollars that you earn, because what happens is that this economy is it's a consumer-based economy. 70% of it is based on consumerism, right? So therefore, the economy knows how to get money out of your pocket. Like, I don't care how great of a saver you think you are, everything is connected. Like when you buy a car, you need new tires. You need new tires, car, you gotta have insurance. Insurance, you gotta have car maintenance. You gotta buy gas. Gas is getting expensive, right? Gotta buy gas, all right? Gotta have new brakes. Gotta do an oil change, right? All those different things, all these different components of just buying one thing. And this is how this economy is put together. And when entrepreneurs are smart, they say, hey, look, if you buy that, you're going to need this. And I'm gonna be over here waiting for you when you get that. Right? You buy a house, you need furniture. Gotta have homeowners insurance. Gotta pay your water bill. Boom, 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 boom. And what happens is in an inflationary period like this, you find yourself not having enough money or excess income, right? Or discretionary income to try to move your life forward financially. So therefore, the best strategy you can do, right? And what I teach is the first fruit strategy. You need a first fruits budget, right? And you need to put your investing and giving should be a bill, right? Should be at the front, at the top. And what happens is that if you don't make it a bill, it's not going to happen. Right? You're always going to find, man, just my windshield. I got this big old crack in my windshield. I mean, it's crazy. Like, what did this big old crack in my windshield? $1,000, right? Because one thing you do if insurance, you want to have a high deductible it decreases the amount you pay. So if you have cash, then you should have a high deductible. Well, guess what? I got to pay out of pocket $1,000+ for a new windshield, right? But what happened is before I even started this month or got my check, I send the money away into the brokerage account and into giving, right? They have to be first because something will always happen on the back end. You buy a car, you need a new windshield, right? An economy is set up like that. Most people don't know that. They think, well, I mean, when I buy something, when you're buying something, you're buying it 3 and 4 times. Like you don't know that anytime you buy something, you're buying 3 or 4 times. You're not just going to get away from just buying one thing. If the company's been in business for a while, it's because they have strategies of not only that thing, but they're going to have 5 or 6 other things that you're going to need to buy within that. And you're going to buy them and you're going to need them. All right. So holding cash in your brokerage account is essential, right? And having a strategy, getting that cash into your account. How do we get the cash into the account? We get the cash by making the brokerage account a bill. And how do we give? We also give, right? Initially in that beginning as a bill, right? We do those 2 things in the beginning, right? Giving, it changes your relationship with money, right? A lot of people have bad relationships with money and believe that there's abundance out there. When you give, it shows that you believe that there's abundance. It's active, right? You're actively doing it. So you show that there's abundance out there. Same thing with investing. A lot of people don't believe that it's abundance out. We have a $51 trillion stock market. There's abundance out there. It's more than enough, right? But you have to have the right strategy in place. You have to be strategic about it. And the first fruits allow you to do that. The first dollars into your account. That's how you fight this economy. And this economy is overwhelming a bully, right? It bullies most people because with all the statistics that we have, everybody should be rich, right? But we aren't because, or most people aren't, right? Hitting it, that 10%, that 1 point in statistics show having a net worth of $1.5 million or higher, right? And you don't hit that because, right, as soon as you buy something, then the money, or you just buy and you don't invest, right? You don't invest in yourself and you don't know how to have your money duplicate itself, right? So the simple strategy of holding cash and strategically putting cash in a brokerage account, and you're going to have all types of things that come at you, but doing it first and then dealing with those things later, right? So a lot of times we do it backwards. We use our discretion. I'm not going to stay on this. I'm going to move forward. But we say, well, after I pay off all my bills, then I'm going to do it. You're not. It's not going to happen. Your windshield's going to break just like mine. It's crazy, right? You need new tires. Whatever it is going to be a problem. All right, the third strategy that we need is you need to buy dividend stocks. You need to increase your cash flow. We don't wait for a job to pay us. We don't wait for a commission check, right? We can set it up a monthly cash flow where our cash flow from our dividend stocks can pay our bills, but we want to use it differently. I'm gonna show you how all this pans in and works together, right? For the good, right? For our accounts. And we want to be able we want to be able to have extra money. Like I said, it's hard when you don't put the money to work and you don't have the strategy. This economy makes it very hard for you to have extra money because there's something always going to happen. So we need to have dividend stocks, right? And dividend stocks can increase our cash flow where we don't have to depend on a job or anybody else, right? These funds pay. And the good thing about dividends compared to other opportunities is that dividends are net. Like, when you try to do a side hustle, whatever, you usually have to, real estate or a business, you got to put money in, you got to put money in the market. Dividends are net, like meaning all that stuff has been already paid. So the dividend that you receive is yours. You don't have to worry about paying it back or having to put it back or whatever. It's yours to do what you please. All right. So this is what we're going to do. So here's the first fruit formula and how it handles the market. So we want three accounts. So this is what I teach everybody. 3 accounts. We want a long-term account, right? So we want a long-term account, and it's usually 50-60% of your portfolio. I say this, but like I said, this is investment advice. You do what you want, but this is what I teach everybody. A long-term account, 50-60% of your long-term is allows you to buy stocks. Like I said, the foundational, putting in indexes and then building on top of the indexes some of the best companies in the world, right? Dividends. We have dividends for stability, right? 30 to 40% of your cash should go into dividends, buying dividend stocks, buying dividend funds, right? And then with a small portion, 10%, going to options. We're looking for an opportunity like right now. Once things clear up, there's no confirmation right now, but once things clear up in the market, we'll get confirmation, and that'll be a time for us to buy more options, right? So we can have explosive options provide us explosive growth in our accounts. And when we do that, right, we can have a formula, we can have a strategy that basically helps us battle every market out there, every type of market. And all in all, this is how everything works together. We have options, we have dividends, we have long term, right? We take our dividends, right? And we can use our dividends to buy more options to explode them. We use our dividends for our long-term portfolio, right? And we split up each accordingly percentage-wise and according to risk, right? There's a lot more risk in options than in long-term investing because there's no time frame on long-term investing. We can hold stocks forever, and if we hold the right stocks, times like this, where some of the best stocks now sell for cheaper because the market geopolitical conditions are wrong, we can add shares to our portfolio, right? Dividends, we can buy dividends right now to increase our income. A dividend is a percentage of the stock price. So what happens when stock prices are down, when they go back up, guess what? Dividends increase. All right. And then in options, we have explosive growth, where you can have, you can double, triple, 50, 100% on your money through options. Right. So we have this, and this allows us to battle a market like this. All right. This allows us to battle a market. This is a strategy that you can lose. We have something that we can use. And let me just say, for a club, right? And this is the main reason why I developed a club. There's so much information out there, and you can do so many things, right? You can do so many things. And life is busy. I got kids, my wife, I got to spend time with her. Kids, we have sports, and everybody has a whole bunch of things going on, right? But the club where we meet tomorrow allows us, 30 minutes to an hour to review our portfolios, review our strategy, implement our strategy, get new ideas, right? And we can implement all these different things, and we can review. Because a lot of times we're so busy. And we say, well, I'm going to invest. And you're not going to invest. You're not going to do it by yourself. You're not going to do it because if you've done it, you would have did it already. Right? You'd have did it already. So we all need a club. And I said, I'm going to create a club. Right? And this club allows me to make sure I'm doing, and I always do research. But I know I have to come on here, doing some research, reviewing the market, looking at opportunities, right? It gives me accountability. And that's the main thing. That's what we all need. And a lot of times it's not the thing. It's right, is being accountable to the thing and having some reminders and having somebody with you to guide you along. Hey, I have 2 links on after this, on the show. If you look in, there's 2 links. There's one link that's for a free one-on-one portfolio review. If you want to do a free one-on-one, and I'll meet one-on-one with everybody in my club. They have a schedule, but I'm opening up for free one-on-ones to those of you who want to just come in and talk stock portfolio, discuss your thoughts and your goals. If you want to do that, right? I'm here. Click the link. It'll take you, to Calendly. Can never pronounce that. And you'll be at my calendar, and you'll be able to pick a day, and we'll meet and we'll discuss the markets, what you're currently doing, and how I can help you if I can. Then if you say, you know what, I believe that you know what you're talking about, Donald, and you say, I just want to sign up, the First Fruit Stock Club link is also there, my website, and I know you can do it on your own, right? And I know you believe that one day you're just going to get it, or you believe that you don't have enough. You can start with $100 or $50. Whatever you have to start though, right? And you need guidance. All right. So, and thank you guys for giving me a few moments of your time. And remember, this is a fundamental market, right? Build the fundamentals in your portfolio. All right. Don't be discouraged. Right. This market can be discouraging, right? You may be trying things that's not working. Right, you need a formula, right? And the reason why we invest in dividends is we can receive income while we wait for the market to turn to what we like. All right, man. Like every week, I say, man, I hope you guys have a great rest of the week and be fruitful. I'm Donald Green, the founders of the First Fruit Stock Club, and God willing, I'll see you next week. Bye-bye.
The market is volatile. The stocks keep going down. Then boom, we hit new highs. Everything is different now, but you don't gotta chase. Don't panic, don't stress. Time to realign, plan it out, invest. It's the first